I mean, I think President Trump wants a lot of things, and sometimes they're conflicting. But as far as the dollar goes, I'd go one step further, not so much just the tariffs, but the uncertainty engendered by Doge, and not even so much what Doge itself is doing, the actual cuts themselves, but the more general uncertainty in the US economy. You're seeing that come through in the sentiment data, not yet really in the hard data, and I think next week's payrolls will be absolutely critical for that, but definitely in the sentiment data, there has been a turn in terms of how people are thinking about the US economy.
When you say next week's payrolls are going to be extremely important, why? They're always important, but why next week in particular?
I think we're beginning to see the impact now in the hard data of the new administration. So, this week we had Q4 GDP, great, but it's so dated. It's referring to very old state of affairs. And payrolls, obviously, the most forward-looking hard data of the US economy. That's why we all focus on it. I think markets are really looking for signs that this US exceptionalism story is actually coming to an end.
What is investor positioning like in the dollar right now? I mean, when tracking equity markets, it feels like positioning has been all over the place as investors were really caught off guard and had to, de-risk their portfolios, which has led to distortions in equity markets. What's been happening in FX markets and with the dollar in particular?
It's a fantastic question because we've seen some really interesting moves over the past month. So we run a positioning monitor that tracks flows not just from RBC but in the market as a whole. And we've seen dollar positioning lighten up significantly, not surprising. Dollar CAD positioning has more than halved. Euro dollar positioning has actually turned from net short to small net long. But I think that captures more of the fast money, the speculative money. It doesn't capture the structural asset allocation. And that's, for me, the key. It's not really a one-week or a one-month story. If that happens, it will play out over a much longer-term horizon.
So what is your outlook for euro dollar then?
So I think euro dollar is a really challenging story at the moment. And I've been having this conversation with a lot of clients, hedge fund clients, real money clients, institutional investors, corporates. The reason is that you've got these competing factors pulling in opposite directions. I do think tariffs are a drag for euro dollar. I don't see this as a dollar positive story. And I think some people making that argument were previously saying it was going to be, dollar positive. Now they're saying dollar negative. I don't buy it when you flip so easily. But what's pulling in the opposite direction is the rotation we're seeing out of US equities and into European equities. And that is really powerful. And so you kind of balance those two out. It's a little bit a question of timing. Short term, I do see a bit of more pullback for euro dollar, particularly next week if we're right in expecting some pretty significant tariffs. Longer term, if you're looking out 2 years, euro dollar is cheap at current levels.
Yeah, so I'm just going to do a very quick correction. We were getting this BBVA statement out, and I think we erroneously gave you the new terms on the strap at the bottom of the screen. So this is the absolute accurate strap. It says BBVA adjusts Sabadell offer to 1 BBVA share and 0.29 in cash for every 5.346, which is what we said, but I think we erroneously wrote it slightly different. But the team did a brilliant job of getting this out quickly, so these things happen. Elsa, let me get back to you as well. For all of that, and I was listening into what you and Juliana had to say as well, the fact of the matter is, to my eye, the euro dollar seems stuck in quite a tight range, actually. Mm-hmm. So for all this extraordinary oscillation, is the volatility that extreme, or is it just volatile but in quite a tight range?
Well, I think it's precisely the fact that it's been pulled in opposite directions by these contrasting factors. We spoke about the rotation out of US equities into European equities. On top of that, you still have a yield advantage for the US that's not really been eroded. And for all the expectations that, if US exceptionalism is coming to an end, if the US economy is slowing, the Fed may need to cut a lot more. That's not really being priced in at the moment, and that's not our call either. We actually think the Fed could remain on hold for the whole year unless the economy slows materially. Yeah. And if that happens, the ECB maybe cuts once more. Again, we don't see that much more room for the ECB to cut either, but you maintain that yield buffer. Again, it softens the blow of what might otherwise be an incredibly positive euro-dollar story.
What do we think about this